Hello and welcome. My name is Paul Wallace. I'm the Africa editor of the Banker magazine, and I'm here with the head of the Bank of Namibia, the country's central bank, Governor Ipumbu Shiimi. Governor, thank you very much for joining us.
Thank you. It's good to be here.
Namibia has a bigger banked population than most other countries in southern Africa, but financial inclusion is still one of the things that's at the top of the Bank of Namibia's agenda. What is the central bank doing to try and increase financial inclusion in the country?
Yeah, you probably have to understand it from the perspective where we came from, because in 2007, financial inclusion, or financial exclusion rather, was estimated to be around about 51%. In other words, 51% of the population did not have access to financial services. So we, together with the Ministry of Finance, decided to have a 10-year strategy, what we call the financial sector strategy. And one of the goals in that strategy is to reduce financial exclusion significantly. We have a target in there of 26%. Although we have made some progress since 2007, financial exclusion is standing currently at about 31%. We still have got some way to go. And therefore, what we're doing is that we have several initiatives that are currently running. One is to introduce basic accounts, for instance, an account which is easy to access by low-income groups. Easy to access in the sense that in terms of documentation that you have to take to the bank, they don't ask too many questions.
The KYC, the Know Your Customer,
the KYC, yes, not stringent, because these are not risk products, because the volumes or the amount of money that flow into those accounts are very, very small, and therefore to launder money through these products is almost impossible, and therefore you shouldn't really worry too much about Know Your Customer. Yeah, so that's one example, for instance, making sure that there are products that will help people with low income to have access to financial services.
Namibia is known as having one of the most sophisticated banking sectors in Africa, but one thing that crops up fairly often is the affordability of the banks, and some people say that they're too expensive, that with the cost of the withdrawal fees, for example, if you're withdrawing deposits, is such that many people are put off setting up bank accounts. Do you think that's a fair criticism, and do you think banks need to do more to reduce their fees?
Yes, of course. If you ask us, we will say yes. If you ask the banks, they will tell you a different story. Yeah. No, we believe that we could make our products cheaper, especially for the low-income groups, and that's the reason why we're introducing products such as basic bank account, because the basic bank account comes with low fees or no fees at all. So if you put your money there, you're not charged a cash deposit fee, which we have in Namibia. Unfortunately, I know it will sound strange to you, but in Namibia, if you deposit cash at a bank, you'll be charged a fee. Withdrawal fees, yes, you will pay if you withdraw too much from your account. You will pay a withdrawal fee, but if you basically just do the minimum withdrawals, there won't be any fees at all. So we're doing that because banking is quite expensive in Namibia. You pay a lot of fees, and if you actually look at the income structure of the banks, a great number, about 45% of bank income come from fees. And as a result, for us to be able to improve and enhance financial inclusion, we also need to look at fees. So we have, apart from the basic bank account, we have also introduced a zero cash deposit fee for if you are depositing up to 2,000, for instance, $9, you will not be charged a cash deposit fee. We also introduced a product for the small business sector. You can deposit up to 10,000 Namibian dollar. You will not be charged a cash deposit fee. So we're looking at that as part of the financial inclusion agenda.
It's slightly cheaper for perhaps poor Namibians to get bank accounts. Namibia's banking sector is dominated by 4 lenders. 2 of those, Bank Windhoek, a locally owned institution, and South African-controlled FNB Namibia are listed, but the other 2 big banks, Nedbank and Standard Bank, both South African-owned banks, aren't listed. Is it the Bank of Namibia's, would the Bank of Namibia like both of those banks to eventually list?
Certainly, yes. That is something that we welcome very much. In fact, as a matter of fact, yeah, you talked about Bank Benduk, which listed this year. We have been talking to the others through moral suasion. Of course, there's no law which makes it compulsory for banks to list, but we believe we have money in Namibia, pension funds, institutional investors who are looking for good investments, assets, and we believe the stock exchange is that avenue where banks can make their shares available, and these institutional investors can buy shares from the stock exchange. So we have been talking to the banks. Bank Benduk listened, so they listed this year. We believe others are in the pipeline.
Okay. Do you think that Namibia's banking sector is too concentrated among those 4 lenders? Recently, a new bank, SME Bank, was set up, and the Bank of Namibia has also given a provisional license to a lender called eBank. Would you like to see more banks enter the fray?
Certainly, yes. It's always a question that confronts us all the time. Do we have too many banks, given our population? We believe that there's still space for more banks. In fact, competition will help us to improve financial inclusion. It will bring down the cost of banking services. Fees will hopefully be lower because you have more players in the market. So yes, definitely we welcome good banks in our market. But as I said, we don't really want institutions that are going to weaken the system as a whole. You want institutions that will make a contribution in terms of playing fair competition to such an extent that it will help to reduce the cost of banking services.
Namibia forms a common monetary union with South Africa, Lesotho and Swaziland. And given the size of South Africa's economy relative to the other 3 members, in some ways it dictates monetary policy for the others, I guess. Does that make your job somewhat harder as governor of the Bank of Namibia to carry out monetary policy in your country, or is it something that Namibia benefits from, you think?
Yeah. Unfortunately, when you are in a monetary union, there are things that you have to give up. And one of the things that you have to give up is basically your monetary autonomy. You cannot set interest rates differently from where the rest of the area is, because within the monetary union, funds can flow freely from one end to another end, and therefore, if interest rates are different, money will end up either leaving your country, going to another country where interests are higher, or coming into your country, and therefore you can no longer support that exchange rate link that you have. And therefore what it means is that if you are in a setup like that, your monetary autonomy is extremely constrained. So basically you accept the monetary policy of the region as a whole. Yes, we can differ to some extent, given that that general constraint. We have had different interest rates. But we believe the margin should not be big, because if you stretch it too big, you will start to see capital flowing in one way or another. We have some instruments that will help us to have interest rate that is different from South Africa. Capital controls that will help us to do that. But there's a limit to how far you can go with that.
Governor Shiimi, thanks very much for joining us today.
You're welcome, sir.